enough, I'm actually looking at that too. So I have the Euro USD, CAD JPY, Euro CAD, and AUD NZD. So those are the four I'm looking at. Which one of the euros are you looking at?
I was about to check Euro USD right now. I just checked Euro CHF, and Euro CHF was going. It was a buy for 4 days. One
Uh,
of them was a 50-50 though. The second day was a 50-50, and then the other two were buys. But
Euro CHF.
yeah.
Okay, that seems good then. I mean, I think let me check. So it's expired. Um, Probability Euro CHF. Let me just pop onto it. I don't think I might have looked at Euro CHF in the past, but I never really put it down to be traded. So let me just quickly reconfirm. But how was your trade last week? Was yours good?
Oh yeah, it was good.
Okay, that's beautiful then.
It did. I didn't profit at the very, very bottom like I should have because it did rise up and hit my stop loss, but it was good. Wasn't a loss.
Were you in profit?
What was it?
Were you in profit?
Just like 40.
Whole true last week.
What was it?
Was that throughout last week you made 40?
Yeah, I wasn't in a lot on it.
Oh, okay. Okay.
I was in a lot more, but then it rose back up.
Okay, that's fair enough.
Yeah.
I mean, last week I think I traded twice. And if I can remember, I probably just made not what I would have expected, but it was fair enough.
Yeah.
You know, but what I've noticed is the market is actually coming back, and funny enough, some of the assets actually still did play out, even though during the quarantine and what was going on. So, which makes me think, the strategy does still work during difficult times. You just have to make sure that you spot them on and you use proper risk management and be a little bit more flexible with how you use them. So, just looking at the Euro CHF, are you looking to buy or sell Euro? Sell.
I was looking to buy it. Yeah, buy
Now, if you're looking to
for
buy
the euro.
if you're looking to buy a Euro, then Euro CHF wouldn't be the ideal buy for you. The main reason is
Yeah.
so we're looking at the first, right, which is we're expecting it to rise based on seasonal. But what we fail to see here in the probability section is giving us sell. Now it's giving us sell for 4 trading days straight. So I'll be a bit very careful on this one. I would observe this one. The way I would suggest trading this would be, uh, I wouldn't even recommend you trading this. No, no, don't trade it. Just be safe. Just be safe.
Yeah.
Euro USD seems to be one of the ones that would be ideal. So Euro USD. Actually, some people say I can't get into the webinar, so I don't know what's happening. Okay, Mukhtar is here. Hassan is here. Hey guys, thank you for joining. So Euro USD would be ideal because look at what's happening right here. We have 59%, 61, 61, 63, 57. So we have a long okay. We have up until the fourth trading
Oh
day.
man.
You understand? So there's a high probability that Euro USD, where is it? Even though it's one of the most manipulated assets in the game, you understand? You have to understand this asset is very manipulated. But I think we can ride at the back of what's going on right now in the States. I don't know how that's going to affect the economy. I'm not sure. But what I can see is most likely this uptrend is going to continue. Understand? So we had this coming. So we probably might have a pullback and then we have price going back up. So if anything at all, this can make up for any losses you've had if you do have a good amount size of position, basically. So we can trade, and the good thing is starts from the first trading day. Now on the first, what is that again? On the first right here, we should see kind of like a powering up from the euro. Now the only question is, if we go to the monthly chart, there's always wicks. There's actually small size wicks. This the last month before this had wicks, but you can see it's right at like literally touching the 20 moving average. So this is going to be a resistance point right here. We're looking at monthly because it's the start of the new month. So I always recommend when you're starting a new month, always start from the monthly chart. So we're going to see like a resistance around this zone right here, but we should easily see support around this zone right here. So 48 pips down, just by the edge of the last candle. So right here will be kind of a support, and here will be kind of a like a resistance level. So between that point, that's around 121 pips, which you can easily buy from somewhere around here. Quickly take some profit off the table around here, and keep fingers crossed. At least we're targeting price to get to the 50 moving average. It's about 400 pips. So ultimate target will be somewhere. Let me try to see if I can get down a different color. So ultimate take profit will be somewhere around here, and right here will be entry, and the first take profit should be somewhere around here. Now, what I've seen in the monthly chart is there's kind of a small wick. I mean, it's been a while we've done that wick, average wick size. Can you guys remember the wick size stuff we usually do? Does anyone remember it?
Are you talking about how you take the last
I
five
actually don't.
and average those 5 candlesticks? The
Yes,
wicks of those
yes, yes,
candlesticks?
yes. With the average, the
Oh,
5 candles stuff. I haven't been doing it recently because I believe everyone should kind of like figure out which one is best for them to work on. I got slightly, you know, not bothered about calculating week size anymore. But what we can do is we can still calculate the week size and figure out what's the best, entry point. So we can see the last candle that went by, we had 185 pips, and we had 21 pips, 19 pips. We had no pips at all on the wick here, and then we had 80 pips right here. So based on the first trading day, now the wick can be massive or it can be very super short, like this type's wicks, like 19, 20 pips. But on average, I'm estimating about, let me see, from here to around here, about 50 something pips. But let me just do a calculation. That's what I would expect on average, some pips. But if we do an average calculation, if we do 185 plus 21 plus 19 plus 0 plus 80, and then we divide that by 5. So it's telling me about 61 pips, right? And if we look around here, I'm estimating 50 something pips. So if we look around here, for example, price is probably going to get to here. It measures about 50 or 56 pips. I'm not sure which one it is, but you understand, it's still close to this figure right here. So ideally, what we expect to see is price coming right somewhere around. Oh, look, beautiful. On the weekly chart, we have the 50 moving average right here. So price coming around the 50 moving average, probably piercing it slightly down. You understand, just to fade people out and then rise back up. So what I would want to see ideally would be a gap to the downside, but I'm not sure if there's going to be a gap to the downside because just simply because what's going on in the States right now. But then I'm going to quickly calculate the daily wick size. So if we calculate the daily wicks, which is 9 plus 5 plus 48 plus 2 plus 4, gives 68, divide that by 5, so about 13.6. So minimum, we want to say 13.6 pips wick. So if price opens around here and if it doesn't gap to the upside, it might be in a good, game. But I would say be patient. There's no need to rush. So the average would be between 13.6 to about 60, I think 68 or 61 pips or something like that. So from here to around the 200 moving average right here would actually be our entry. So we have a very massive entry zone right here, from here to here. But what we can do is we can narrow that down a little bit more. So let me just, now where is that stuff? So bug. So what we can do is just slightly narrow it down, because this asset is highly manipulated, right? You have to be very careful, because what it can do is quickly run up and then run back down, clear you out, then start running back up. So you have to be able to avoid that, or quickly run down, break through, and consolidate around this area. And while you get your position and you put your stop loss around here, it does a quick raid, then go back up. So you want to try to avoid that as much as possible by getting the ideal entry zone. But we don't want to be too tight as well, so we don't miss the entry. But just by looking at just the moving averages, it's given somewhere around here. So ideally, entry for me would be just right around the tip of this candle right here. I want to see price pierce the 20 moving average, just like something it did right here. Touch somewhere around the zone and then lift up. So that would be for me the ideal entry for Euro USD. But then there's another scenario in which when price opens and price start racing up. If that's the case in this situation, guys, I think this is very important. After we've done this analysis, sometimes price does come down and come into our entry zone, and in some other scenario, price just seems to run away from our entry zone. Okay, but majority of the time, price comes to play in the entry zone. So what I would suggest, if price seems to be running away, guys, don't even bother to try to chase it by yourself. Just load up your PZ day trading. That's all you need to do. Load up your PZ day trading. And I know some of you are going to work and you might not have the chance to, do this. And I'm thinking of a solution for you. I'm actually thinking of the EA itself. The EA that trades for me, I'm thinking of putting it up on the site itself. But in order for me to do that, I don't want to violate certain, kind of certain rules in people's indicators, because I don't think I have the right for their indicators. So just to avoid certain things, I'm trying to figure out the best way that it's not going to affect me in the long run in a negative way. The EA is coded, partly coded by myself, because I do run some codes myself, and partly coded by some other people as well. But in terms of the indicators that he used, for example, there's a consolidation indicator that he used. I don't have the distribution right for that, so I have to be very careful. So, but yeah, what you ideally do is, in this situation, if price seems to be running away from you, just move to like the 15 or even the 5 minutes if you're in a hurry. 15 or the 5 minutes time frame, and get your entry with PZ. Just get your entry with a PZ. Wait for the buy entry like this, and your stop loss slightly below it. So in this scenario, if you had here, your stop loss would be 16 pips. In this scenario, if you had here for your entry, your stop loss would be 19 pips. Understand? By the time you have that the first time and prices move about 10 pips into your profit zone, just lock yourself in profit, because price might sometime come back to your entry zone, and you don't want to be like, oh, you're in a hurry to get in, and then you end up losing money, and then you don't have enough to trade with, or you feel a certain type of way about trading after that. So those are the two scenarios which are which is most likely going to happen. Is either price comes into the entry zone or price moves away from the entry zone. In each case, I think you're well prepared. If price comes to the entry zone right here, trade, based on the moving averages. Let me switch back to the color. This color noise right there. So, price comes back to your entry zone, trade from your entry zone. If price seems to gap to the upside and doesn't want to come back and start moving away from your entry zone, use your PZ on a 15 or 5 minutes and lock yourself in. Okay. Is there any questions on that one? I hope I've been detailed enough.
Pretty clear.
Yeah. Okay. And if in any situations you're what's it called, you're struggling to kind of because you're at work, you're struggling to kind of cope simultaneously, what you can do is have a Zoom meeting on your computer. And okay, I thought perfect. Have a Zoom meeting on your computer and invite yourself to the Zoom meeting, and just have that running on your phone while you're at work, so you can keep looking back on it. So all you just need to do is a flip screen, look at it. If you've got a sign or indicator, an indicator saying you should buy, then buy. You understand? If not, just chill. You understand? That way you can have the computer with you anywhere you go. You know, just zoom yourself and just keep it on your phone. Okay, that also helps. So that's that for Euro USD. Then the next one is CAD JPY, and then so let me just quickly pop into um, JPY, I think, and go to probabilities of CAD JPY. This month, there's gonna be a lot of stuff happening this month in terms of trading. So this month should be able to make you a reasonable amount of profit. So if you made, let's say in the past 5 to 6K before, you can easily double or triple that during this month. There should be enough opportunities to do that. During now in June, so we're looking at CAD JPY, in which you can see sell, sell, sell. We had 3 days straight, then 50-50. And we can easily capitalize on that. So let me just quickly pop onto the JPY. So from here, we have it up until the 3rd, just like exactly like the probability. So we have that in play. And, you know, and keep in mind, I know I haven't spoken about, COT report right now. The main reason is COT is likely distorted at the moment. You understand? So there's a lot of confusion still out there. So it's a little bit distorted. So we just have to, adapt to the situation. We can still check the COT report for the JPY and the CAD and see which one goes, or the Euro USD. I think for the Euro, it doesn't even look good for us. It doesn't favor us on the Euro, I think. But regardless of what it is, it's still an opportunity I want to capitalize on. So in this situation, CAD JPY would be another one to go for, which is a buy. I'm just gonna let me see if I can get a new chart. I just load this, for example, and so CAD JPY. And also I haven't spoken about the Williams, right? So that's another one. So just straight by looking at it, you can see the Williams is trying to curve up, but that's not sufficient enough. That's really not sufficient enough, especially when you see the down curve already happening right here. So, but let me check. Actually, wait, we might be correct. So yeah, CAD JPY. JPY is meant to go up, which means CAD is meant to fall. Okay. Yeah, so that's correct. The down curve actually favors us more than the up curve. I was just saying the up curve wasn't sufficient enough. So actually, we want to actually sell this asset. We want to sell it. And just by looking at this alone, I already know where my take profit is going to be. My take profit is going to be right here on the 50 moving average, or just right between the 50 moving average and the 20. It's right here because it's going to pierce a little bit more. It's not a lot. It's about 87 pips, but that's still something to hold on to. You know what I'm saying? And we still have a little bit more favor from the William. Excuse me. So in this case, what we can do is we can do the average. I've already done that before. Excuse me. But I feel it's something everyone can do within their own time. So just to save some time, what we can notice though is always move from the higher time frame down to the lower time frame, so you get a bigger picture of what's going on. So what you can see right now on the weekly time frame on this asset is price stopped at the 20 moving average. You can see price stopped there and started pulling back. So ideally, what you expect is this is already acted as a dynamic resistance. And even if you look at it, you can see at this point there's a resistance point right here, just at the tip of the candle, and that's exactly where price kind of stopped and tend to move back. So what we can expect is price falling back down from that zone. So that in itself alone is sufficient for me to sell this asset. Now the entry, I don't want to do too much work. I just want the indicator to do the work on this one. So all I'm going to do is I'm just going to pull in the support and resistance PZ on this. Let me take it away. So I'll put that on this, and then I don't need day trading for now, but I'll do that when I need it and stuff in the live trade. So what you can see by itself is price stopped at the resistance level right here. And if you want to look for an ideal entry, you can see this. So what happened right here is some people probably sold at the 20 moving average. And notice the 20 moving average right here, they sold, or they notice the resistance level right here, they sold. And guess what price always does? Come back and raid them out. So this right here is a raid. Raiding anybody that's not sure of the position or anybody that's locked in break even. You know, raid them all out. And now price is most likely going to bottom out. You understand? And right here, on this zone right here, should be around the same place the moving average, the 50 and the 20 moving average is on the daily chart. So you can see just right there, the 50 and 20 is just somewhere around here. And guess what? That's your take profit. Don't stretch it too much. Just take your profit and walk away whatever you can at this point. So right here is our take profit zone. So now we have to look for where our entry zone is. So since price has raided this, guys, I don't expect price to go back and raid them again. So if anything at all, I'm gonna expect to see kind of like a move down. I can calculate the average of the sell candles, the previous sell candles, and use that to estimate an area in which I can sell again, or I could just use my own plain support and resistance. So by just looking at the chart. So another way is just lower your time frame, like go to the 1 hour since you have a PZ there, and you can see price is even coming to a support level right here. So price is most likely going to kick off. If price opens exactly here and doesn't gap to the up or the downside, then price is probably going to kick back up to around this zone or even around this zone right here. So just by barely looking at it on a smaller time frame with the indicator, right here is my entry zone. I want to enter somewhere around here. But now keep something in mind. You're gonna have to battle like the price. This one's gonna be a rocky one because price will have to break the moving averages right here. And if you look at it, the moving average kind of did a good job like keeping it above from here, from around here. And price came to retest, kept it above, retest, kept it above, you know, and then retest and then consolidated between both moving average, broke through, came back again. So right now, this resistance point and the support level is not as strong as it was before. It's already broken. And also the resistance level is not as strong as we think it is because the new resistance. So the biggest resistance for it is right here. So if anything at all, price is always going to come back to around this zone because that's the area of the biggest resistance. This is a small resistance level right here. And your entry should be between this box. So if we're looking at it, your entry is about 17 pips wide. So even if you enter right here, your stop loss will be somewhere behind here, about 24 pips. If you're using the normal way to go in. If you're using the PZ indicator to go in, you guys know what to do by now. Just load your PZ day trading if you have it, and just wait for price to pull back. In this scenario, I expect price to pull back. I don't expect anything short of price pulling back. Even if price actually breaks below here, you know, I expect price to kind of pull back to close the gap. So in this scenario, I'll probably go to the 15 or the 5 minutes, and I'll wait till I get a signal within this zone. So I'll wait to get a signal somewhere in here, the sell signal somewhere in here, and then I'll put my stop loss just right behind it. Just right behind it. Just like here, right behind it. And when you're about 10 pips into profit, just lock it in. Or 20 pips into profit, lock it in. Don't waste your time letting it ride. Just lock it in. Okay, that's what you want to do. Okay, and one more thing. When you set your stop loss, especially if you're not using the indicator, okay, if you're not using the PZ indicator, always leave about 20 to 30 pips away, okay? The main reason is because sometimes price always comes back and retest your entry zone. In most cases, it will come back to retest your entry zone. And, you know, if your stop loss is too tight, price will raid you out and then go back in your direction, which you've lost a certain chunk of the money in your balance. So to avoid losing that, you have to gauge how much you're willing to lose. Excuse me, just like we had in the Excel worksheet. and gauge the amount you're willing to lose, and that based on that you set your entry and you set your stop loss. Okay, that should be simple enough. So in this scenario, I ideally expect price to start from here, but if it starts down, price is going to retest. But if price happens to start like gap up and start between here, just stay patient till you get that signal from your PZ. You should get that signal from your PZ, then trade down from there. So okay, so that's the second asset I'm touching on. And then the third one, I don't want to touch on euro again. I already touched on euro. So I just touched on AUD, NZD. Okay, let's go check that quickly. And then we'll wrap up for today. So AUD, NZD, okay, AUD, NZD, okay, you said, just gonna copy what you said, Cortland. Um, so we should do USD, JPY. Yeah, there's a lot of assets to trade. CHF, JPY, so CAD, CHF. Yeah, so only trade if the seasonal and probability and in your direction. And also, ideally, you want to get the Williams slightly in your direction as well. Okay, don't forget, just try to get the Williams in your direction. The COT report, we might not get that in our direction. You understand? But regardless of how it is, we will still take the opportunity anyway. Okay, well, these are good trades you're looking at right here, and I'm gonna actually trade. I should be able to trade some of them, especially this that looks very long. So I'll trade that as well. So AUD NZD is the next one online. So let me just quickly pop onto that one. AUD NZD. Let's see what that looks like. Now, what do we want to do with this asset? So we want to buy this asset. Now, just by looking at it, I want to buy it. Look, Williams does not favor this at all. I mean, it looks like a small bump, but that's not sufficient enough. So this is going to be a very risky trade for me, but I'll still take it anyway. But always taking with caution. So I'm just going to go back to, so let me check the AUD seasonal. So the AUD seasonal, let me see, AUD seasonal right here. So we have the first, price is gonna go up. Okay, so it's one thing, and then yep. So we're gonna look at the kind of like see. So in this scenario, for example, price starts from the second. We actually look from the second trading day. So the first trading day, we're expecting price to pull back, and then from the second, trade price to go up. Can you guys see my screen? Mukhtar just said you can't see my screen. Can anyone see my screen?
I can.
Okay.
Yeah, I could see it.
Mukhtar's probably a service issue. Thank you, guys. So I know this is a lot to take in. I mean, we're just coming back into the mood, and it's gonna be kind of difficult to kind of wrap yourself around it. But let's just get back in the groove, and we're still gonna buy the airline stocks. I mean, someone was showing me the Air France was going up. I can't remember who was showing me that. I think it's either Cutland or Jordan.
Yeah, but then I looked at the date, and it was in April. It was a while ago. I didn't see it when I actually sent it, so that was apologies on that.
No worries, man. You good? No, you good. That's it. Once they say that everything is opening back up, we're gonna start buying. Or even maybe before that, I still need to get some more seasonality up on those ones. So the second trading day is when we buy the AUD NZD. So AUD NZD will buy on the second trading day. And so ideally what we want to do is wait for price to come back down, probably ideally to the 20 moving average. And then we kind of see a consolidation around here and then buy. So, but regardless, on Tuesday, just don't trade this. Wait till Tuesday to trade this. And on Tuesday, just load up your PZ. I mean, this is the easiest cheat ever. Just load up your PZ and just go in with when you get the buy arrow. That's what I do nowadays. to stop myself from stressing, just going with the buy arrow. Buy arrow, set your stop loss below it. Not directly on the line here, but somewhere around 2 to 3 pips below it will be perfectly sufficient. You understand? So that way you avoid being raided. You understand? So that would be it for this. And when you're about 10 to 20 pips in profit, lock yourself in. Don't give the money back to the market. The market is super rich. It's super wealthy. It doesn't need your money. You understand? You need your money and you need the market money. So take the money from the market, regardless what it gives to you. You understand? So don't let it take back from you under no condition. So in this scenario, we're just gonna buy this weight for the second trading day, which should be the second. Okay, is there any questions? No?
Everything looks pretty clear.
Okay. I know we're just coming back in, and I know, it feels weird, going back to this method again, but kind of get used to it again, work your way through it, and don't rush, guys. Don't rush. And if you're not going to be at home, set up a Zoom meeting on your computer and send yourself a link. So whenever you need to, you just join that link when you're at work. You understand? Or where you're anywhere, you can join it and, see the screen on your computer. Just partition your screen, if you have to. Partition it, put your indicators up, so that way you can see your full screen when, when you're at work, and always be at alert. And the second thing I always recommend is set your EA. You have the EA, the auto stop loss EA. Set it in the correct way. You understand? Just set it to the best settings. The stop loss about 25 pips should be sufficient enough. Target to lock profit. I mean, this is too tight, but you can do something like 20 pips and then lock in like 4 pips in there. You understand? 4 pips just to stay safe, and then you can trail it if you want. You understand? But please use these tools. These tools will save you money. The way I see the market is this, right? I'll rather not lose any money in a trade and have the satisfaction that the trade is right, then have the satisfaction that the trade is right, but I lose some money in it. So you understand, just don't give any money back. Keep it. Every penny counts. It might not look big to you, but if you keep growing with $100, $200, $300, $400, every single time or every single week, you're profiting about 400, 500, 600, 1,000. Even if it's $10 every week, in general, that will add up to a large amount. You understand? And that's what you want to aim for. It adds up into a large amount within 6 months. You would see the massive difference in your account. So please, guys, that's one lesson we have to learn. Always and always and always, don't risk too much. If the price is in your direction and you have money already, hold on to that money. Don't let the market take it off you. Okay? And that's it, guys, for today. That's all I have for you guys. But you have all the tools online. Please use the website. You have it. Use the website. I mean, to me, this is some of the best tools I've found in trading. And, I've yet to see anybody that's put it this detailed together. So please use it. You understand? Use it. While everything is still in order and everything is still working, please use it. Because I don't know if this will still work a year from now or 2 years from now. So while it's working, use all the tools that you have to make as much money as you can make. Okay? All right, guys. Take care of yourself and enjoy a wonderful week of trading. If you have any questions, just send me a message on the Telegram and I'll be glad to respond to you. Okay?
All right. Thank you very much, bro.
All right. Thank you very much for attending, guys. Take care of yourself. Bye.
You
Stay
too.
safe.
Thank you.
All right. Bye.